Hi, my name is Marty Straka, and I'm a mortgage loan specialist. I've been in the mortgage industry since 1990, and I've been helping clients with all different levels of mortgage financing through that time. We're going to answer quite a few questions that often come up in the home buying process. And so let's just get right to it, and let's ask a few questions and provide some answers, and hopefully this will help you when you're looking to buy your home.
How can I determine what mortgage amount I might be eligible for?
It's a very good question. How much you can afford to borrow is going to a lot be based on how much money you make. And the normal rule of thumb is that you can afford to borrow about 3 times what you earn. And if you're good at managing your money, you can even take that up to as much as 4 times what you earn. So if you earn $50,000 a year, you should be able to comfortably afford a mortgage of up to about $150,000. And if you're good at managing your money, you might even be able to go up to borrowing $200,000 on that mortgage money. Excellent question. You should talk to the specialist to review your specific situation so that we can take all your other debts and obligations into consideration and give you the answer that's right for you. What's next?
What's the difference between a pre-qualification analysis and a pre-approval application?
Wow, now there's a very good question, and one that we run into all the time when working with real estate agents. A pre-qualification is in many cases nothing more than a conversation over telephone where very, very basic information has been reviewed. In many cases, they haven't even taken the time to properly pull a credit review or actually look into depth as to what your obligations are to see what you can afford. A pre-qualification, for most people, really is not of a whole lot of value. You want to make sure you're actually getting a full mortgage pre-approval. Now, in the case of a mortgage pre-approval, your loan officer is going to go and ask a lot of questions. They're going to want to see the documentation about how much income you make and how much money you have to work with. They're going to pull a copy of your credit report, and what they should be doing is actually taking your mortgage qualifications and putting it through some sort of an automated underwriting process where there's an actual third-party decision maker reviewing the information and determining that you qualify for the mortgage you want. A mortgage pre-approval is much more powerful in the home buying process than a mortgage pre-qualification. And always make sure that your loan officer has reviewed what your monthly payments will be based on the loan you're talking about, how much cash you're going to need in order to complete the transaction, and every other aspect of the transaction so that you know all the numbers up front. To not have those numbers and have a pre-qualification doesn't help you. Know the numbers, know the facts. What else do we have?
What's the minimum down payment for conventional FHA and VA loans?
Wow, okay, there's a question that covers a lot of ground quickly. On a conventional mortgage, the standard guidelines call for a minimum 5% down payment. There are always exceptions to just about every rule in lending, and in some cases you can even qualify for as little as 3% down. But the industry standard is a minimum of 5% down payment. If you're in a soft real estate market, they may require 10% down in order to qualify for that loan. In the case of an FHA insured mortgage, which is a government insured mortgage, their minimum requirement is a 3.5% down payment of the purchase price. In the case of a VA loan, if you qualify, you can qualify for as much as 100% financing. Every person's situation is unique. There are programs out there that will provide 100% financing, and it's worth taking the time to look into. But as a general rule of thumb, you're going to want to have somewhere between 3.5% and 5% of the price of the home as a down payment. What else?
How about VA loans? Is there a minimum down on those?
Well, the VA loans have different requirements that come into play, but the general rule of thumb is no, they don't require a down payment. It also depends on how much you're looking to borrow. The VA program was designed as almost like a first-time home buyer program for those veterans that were coming home from World War II. So what you're looking at is entry-level pricing of houses. If you're looking at homes in our market of New Jersey, a $200,000 house, a $300,000 house, you won't need a down payment. However, if you start looking at $500,000 and $600,000 homes, then you need to start having down payments involved in the program, even if it's a VA guaranteed loan. If you're a veteran and you qualify for a VA guaranteed loan, it's absolutely worth looking into. There's some great benefits to that program.
Great. How do I apply for a mortgage?
Well, applying for a mortgage comes down to starting with a conversation with a mortgage loan specialist who's going to try and determine what's the reality of what you're hoping to achieve versus what the market will bring together for you. Then you're going to want to schedule either a half of an hour, 45-minute phone call with that mortgage loan officer where you're going to be providing to them all of your details of your information. If you want to have a proper mortgage pre-approval, you need to make sure that that loan officer has seen copies of your income information, pay stubs, W-2s, or tax returns. They've seen your bank statements so they can verify how much money you have to work with in the transaction. And they've taken the time to actually pull your credit report and review everything. Did that answer the question for you?
Yeah.
Good.
I'm thinking about having a home built for me. Do most mortgage lenders provide construction loans?
Wow. Well, in today's market, a lot of lenders are no longer providing construction financing because it's a very difficult and challenging market. Usually the local banks will do an excellent job of providing some construction loan programs, but understand that it's actually harder to qualify for a brand new home than it is to qualify for one that's an existing home. When you buy a brand new home, you would think, hey, this is great. I don't have to put anything into it, but that's not truly the case. When you buy a brand new home, all the trimmings still need to come from you. Landscaping, drapes, curtains, mailboxes, things like that. So it's actually a little harder to qualify for new construction financing for some people. And that's a specialty market in today's world.
Okay. Will there be a fee charged when I make my application?
Well, there's two different sides to that question. You typically will not be charged any kind of a fee to get pre-approved. A pre-approval process is provided as a courtesy by most professional lenders. When you actually find a property and you're under contract and you're actually starting the formal mortgage application process, most lenders are going to charge an application fee up front that's basically designed to offset the costs of the appraisal and getting credit reports, and in some cases some basic processing fees. Your initial upfront application for most lending institutions is going to run somewhere between $350 to $500. That's money that's going to be spent out to third-party companies, and it's an expected part of the process.
What documentation should I be able to provide you when I apply for my mortgage?
Everything. Everything under the sun. We want to know your entire history. Actually, in today's mortgage environment, the documentation has become a critical part of the process, and they're looking for a lot more details in that documentation. You're going to want to have at least one complete month's worth of recent pay stubs. You're going to want to have your last 2 years worth of W-2s, and you're going to want to have your last 2 years worth of complete tax returns available to preview with the mortgage lender. This is so that they can verify all of your income. If you receive such income as things like alimony, child support, it's not necessary to disclose those, but if you want them to be involved in the process to qualify, you need to bring documentation on that also. The same thing holds true for Social Security income or any other types of income you have coming in that are outside of the norm. The more documentation you bring up front, the faster your pre-approval process will go. For bank statements, you typically need to verify at least the last 2 complete months of banking so they can see all of the monies, your traditional banking history, and how much money you have to complete the purchase. Outside of that, every buyer's got exceptions or unusual situations in their transaction where the lender might ask for an unusual document of a deed or tax bill or some other type of information. But that's each individual's case-by-case situation. 2 months worth of bank statements, 1 month's worth of recent pay stubs, and W-2s or tax returns. You need that up front to get things rolling.
Okay. Do most lenders require a homeowner's inspection of the house that I'm buying?
Well, the answer is no. Most lenders don't require a home inspection. A home inspection is designed to protect the borrower in the house that they're purchasing. It's strongly encouraged. It's excellent recommendation, and I would certainly encourage you to get a home inspection done also. Many people will often confuse that when the lender has an appraisal done to the property, that they think that's a home inspection, and it's not. The appraisal is strictly there to help to verify the value of the property. And while the appraiser may make note of certain conditions on the property, things that might need major repair, it's not a home inspection. You should get a home inspection done. You'll learn so much more about that house. I strongly encourage it.
Well, I appreciate all the information. What's the best way to reach you to start the process?
Well, the easiest way and the best way to reach me is with my cell phone. My cell phone is with me all the time, and I take phone calls from 7 in the morning until 11 o'clock at night. My cell phone number is 973-598-5006. I'm Marty Straka, and it's been a pleasure.
Thank you very much.